I would say as far as like home investing goes or real estate investment, that's a growth investment. Having that long-term home, you rent it out, you sell it maybe 10 years later, whatever. And as far as value investing for real estate, it's flipping houses. You buy a house, you flip it within the next like 6 months to a year after you renovate and everything. That's value.
What is up, guys, and welcome back to YBI, where we discuss opinions and strategies on how to better your financial selves. Zion and Roman back again. My boy, what's happening?
What's good with you? You know what it is. Watching this
Man,
money
it's been
pile up.
yes, sir, yes, sir. So by the time you guys see this, it would have been a few days since we had posted.
Mhm.
Um, I had been a little ill or whatever, got a little procedure done. First and foremost, take care of your physical selves, guys. It's hard out here in these streets, but do what you got to do, So that's what happened. That's why we were a little bit behind, but we are back now and we are hopping right back in. Today, what we got, my dude?
We got another peek into our portfolio, the April update into our M1 portfolios. And then we're also going to talk about a little bit about ourselves today and just kind of what kind of investors we kind of see ourselves as, and kind of bring that up back to what we talked about before, is trying to see about what kind of investors you all are. It kind of spawned off someone asked me a question about my portfolio. That kind of why I wanted to talk about that. So we can do that after we look at our portfolios.
Bet. Let's get into it. So just as a recap for everybody that's new, a couple months ago, we started an M1 portfolio to kind of do a challenge to see where Roman and myself could invest into M1 and where we would, come up together, or where one portfolio would do better than another. So Roman made both portfolios. I've slightly adjusted things here and there, as you guys will see. In the last month, I've added a couple of things, but we'll see how that has affected my portfolio overall. And then, like Roman said, we'll take a look later down the line just to see what type of investors we are in general. So you want to start with your portfolio?
Yeah. Dividend growth income. All right, cool. So for this month, a 4.18% growth overall return. Overall, that was a $236 gain. Earned dividends for the month around $10. Everything else was just market gain. Overall, every sector in my portfolio did pretty well except for communication, but communication only down 0.67%. So in my world, in my type of investment, that's good because it's pretty much flat. There really wasn't much change at all. I'd rather see either like slight growth or not, like slight decline, because that's fine no matter what, because dividends are still going to grow, and that still works for me. Actually, pretty boring month for myself, as you can see. Nothing really happened. No one really had any big dips or anything. Real estate still, of course, doing the most growth overall right now. Financials, the financial statements, earnings did come out last month, and they did do pretty well. Okay, that explains what that had to hit. And overall, the stock market was just good, which is why these ETFs were doing as well. All right, yeah, not too crazy over there.
Hey, let's see where mine is at. You got the screen share function for me?
Yeah. I gotta see on this here. You gotta become a host now.
Okay, cool. So over the last month, um, there's been $6.16 gain, and then we're up 2.7% overall. So as you guys saw, Romans has been for some years. I mean, he's obviously got six G's in there. This is for everybody else who is just getting started. This is what you can expect to see. Um, Overall, I added about $150 that month. But obviously, the more money that you put into the market, the bigger the return is that you're going to see. So all of these changes that you guys have seen, I mean, for the most part, these are just, it's going up, but it's going up pretty slowly. And then all of these jumps are me adding money. So we had a slight dip by some change, literally like 10 cents. And then we're going up aggressively, another little dip. This is me adding money again. We're up again right here. This is pretty flat. And then again, I added more money here. So for the most part, we're seeing an increase Obviously, the gain is $6.16, which means I did nothing. I did nothing. I got $6.16 that month. This is the type of passive income that we're talking about, that I literally did nothing for this.
Your
This
money
was
works
my
for you.
exactly. So we had $6.10 in market gain. We had only 6 cents in dividend from this previous month, but that's the difference in our portfolios. Roman was looking more for dividend. I was looking more for market gain.
Yeah.
So this is exactly what I expected to see. As I continue to add more, this is what I added here. So this is the marijuana one.
Yes, MJ is a cannabis. That one's a cannabis ETF with 8 to 10 companies that are right now public on the market. Just I forgot what news had us prompt that it was another state that legalized it again. But I've talked about it before on this channel. It's an investment that I'm one of my more riskier ones, but it's something that I am like advocated for just for the simple fact of if it goes fully legalized, it'll be a multi-billion-dollar industry throughout the U.S. and even in Canada and other markets, no matter what. So the more it gets legalized, the more I'm like, okay, I've been buying up shares since it came out.
Yeah. So when I saw that more states were starting to legalize, as you know, it started to build a little bit more steam. I said, why not? Why not get involved? You know, you don't have to necessarily believe in it. You don't have to smoke. You don't have to do any of those things. But I can make money off of it.
Exactly.
So as you guys can see from this, it was up 4.7%. So it was actually more than my actual portfolio itself. So that's why I decided to go ahead and hop into this. Look at my big jump. Look at this. From $4 to $6. Look at this jump. This is what I'm talking about.
Just with the news and everything else going on, it's been I'm interested to see how that market goes, and a few other markets like just the gaming market too. I'm trying to put something together for that. There's a couple growth things for the year that are going to be popping out.
And as you guys see, I only bought this on April 20th. So this is from April 20th through May 3rd. So this is literally like
he bought just
like a week.
I remember us talking about that.
Yeah.
Yeah.
So that's pretty much where we're at right now. So if you guys are following along, you guys should be seeing this type of growth as well. If you guys are confused as to what's going on, you know, in the different slices and all these other things, I mean, look at this. Everything is up. Everything is up for me. So again, this is me just being consistent and adding money every week now. I'm getting to the point where I'm trying to add money every week and on a weekly basis. And then if there's a dip in the market, I'm adding more money specifically on those days.
Yep. You even see
that's
like
the way to do it.
Yeah, both of us kind of keep pretty much a cash balance in there. And whenever you see like, okay, I feel like today's a good day to buy, even if it's like not on your set schedule, you just want to throw an extra $20 or whatever in there. You can just always set a buy order, you know, and just throw $20 in there. Now, you know, as far as the overall market take, I guess for right now is just dollar cost average. Both of these portfolios are meant to be like you dollar cost average in, and they'll slowly grow over time, no matter almost what the market does. Now, this portfolio in particular is both dividends and growth. Like I'm not always just looking for the highest dividends off everything, also for growth, which is why you see during the months how the market gain, of course, is far outpacing how much dividends are produced within that account right now. My hope is with this account one day is that the growth will end up pushing up the dividends itself, because as the actual market gain grows, sell off some profits, reinvest those, the dividends get larger, and then by that point, at some point, I can literally just pretty much live off the dividends at a certain point, or at least pay off some things with that, and have that growth continue to grow and it's compound interested. That's the long-term goal for that one. It's more of a growth investing, which is in the sense of growth and value investing. Do you remember what those were? I remember we talked about them a while ago.
I mean, you can give a quick little refresher.
So growth investments are ones that typically are more long-term. Ones that you see a company to actually have like long-term growth. Value companies are tend to be more short-term. You tend to see more quick value in them for quicker gains. So most times you see, I guess most value investments anywhere as one day up to maybe a year. Most time long terms, you're going to see at least 2 years or longer, most of those things. And you want to have more long term on those. So in my case, being a growth investor, I do say that M1 is my growth investment portfolio, which is why I named it what it was. It's meant for long-term growth and averaging in there and seeing what the market does. That's why I really don't really matter if the market even tanks a few percentage points or whatever. I just buy more in because I know it'll correct itself and end up growing more over time. This is not a portfolio I'm expecting is going to make me rich in a year. It's a portfolio that's going to be have me set in about 20 years.
So I guess that's the perfect segue into the type of investor that you are. Where are
Yeah,
you at
I think I
on
already
the
talked about
spectrum?
it. I guess so.
I mean,
Growth. I'm growth.
I'm growth.
I'm
I am
growth.
definitely growth over time because, as you guys can see, I started with $100 in that account just a couple months ago, and you guys have been able to kind of track us over the last couple of months, the last 2 months. We started this in March, right? So we
Yeah.
started this in March. So it's pretty much $100 a month. It should be more than that. It's going to be more than that this month for sure. But we're looking for growth because, rather than just leaving this money in my savings account, or, obviously you need to have your savings account, and we're going to continue to harp on the fact that you need to have a savings account and you need to have a emergency fund. You need to have both of those things. But then if you have more money that's just sitting around, this portfolio is making me more money, more interest than it would in my savings account.
Yep.
So it made more sense for me to take money from there and start putting it into this account because growth is what I'm looking for. That's the same type of investment strategy that I have when it comes for me looking for a property. I am still in the home buying process. I'm done with the pre-approval stuff. I'm looking at places. The market's insane. If you haven't checked out our last video just about the market, where it's at right now, do that because it'll give you an insight onto what's taking me so long to find a place. So that's kind of where I'm at, but I'm looking for a place that I'm going to be able to hold longer and be able to rent out at some point after I decide that I'm not going to live there anymore, and then grow and then continue to own and hold properties and to continue to get rental money from these investments long term. That's what I'm looking to do. I know a lot of people that are more short term that are looking to purchase something, put a little money into it and flip it. That's another way, but that's
Yeah, I would
a
see
lot
that
more
as a
short
I would
term.
see that as a value investor. As that, I would say, as far as like home investing goes or real estate investment, that's a growth investment. Having that long term home, you rent it out, you sell it maybe 10 years later, whatever. And as far as value investing for real estate, it's flipping houses. You buy a house, you flip it within the next like 6 months to a year after you renovate and everything. That's value. Actually a way better, easier example to kind of describe those two right then and there, maybe more tangible way.
Exactly. Exactly. I mean, at some point, I'd like to get into both. I'd
Yeah.
like to make sure that there is consistency in terms of the money that I'm going to see now and consistency in terms of money I'm going to see long term. Because, I mean, at the end of the day, if you start flipping homes, there's more risk involved. You need contractors, you need time, you need a lot more money on hand. You need to do a lot of things. You have to make sure that you're passing inspections and codes and all these other things versus when I'm fresh into getting into real estate, I'm like, I just want to start with where I'm going to live, and then I might even do something that's like a duplex. If I get a duplex and I buy the entire duplex and let the other renter that I have as a landlord pay my mortgage, then I'm doing both technically. So
Yeah. You get it
you
from
have to be
both
aware
pots.
of taxes and all those other things that we've talked about time in and time out. But for my investment strategy as of right now, it's growth for
Yeah,
sure.
it really just depends on like where your risk tolerance is and how much you want to risk. And as in value investing does usually carry with it more risk because you're usually doing more quicker flips, even within the stock market, or even any market, crypto market, art market, anything we talked about on this channel. If you're looking for that quick flip for the more riskier ones, you kind of need to know what you're doing. Not to say you can't do value and growth. I do have my own value portfolios where I do kind of even do more day trading, where I'll pick a couple stocks for the day, and then trade those, or for the weekend, see how they're doing. So you can do both. It is really figuring out, especially when you're new to investing, you really want to have one and research that strategies in those ways and figure out what works best for you and do that first. Don't try to do both until you kind of have one down, and then kind of diversify even more. With one type, you want to diversify, and then well, okay, we'd be like, okay, my growth income portfolio is set pretty fine. I'm just going to keep throwing money into there. I'm just really do too much research into it. Then you're like, okay, maybe I want to earn some quicker returns doing something else. I want to trade some Dogecoin or whatever. Then you can start researching those things and maybe playing with some more riskier assets, but don't really jump into that waters until you are ready to do so. Don't just dive head in, put all your money into it, and it tanks 30% one day, and then you're ripping your hair out or whatever because you're just stressed out over it. That's not the way to go. Do your research, be set, be prepared.
Contact a financial advisor.
Yes.
Yeah. Yeah. I mean, obviously this is our money, so I can do whatever I want. And I feel confident in what we're doing here. You guys, like I said, you guys are following along with the whole process. So it's easy for you guys to see, oh yeah, they made this amount of money. Literally, if you're doing what we're doing, you're gonna see the exact same return that we have. But we're not financial advisors, so I can't tell you to do that. But
Exactly.
you see I'm making
Yo,
money. You
yeah.
see we making money.
Yep,
What
yep.
you
The
mean?
portfolio's open for y'all to see. It's open for anyone to like, even copy or use if they want to as well. But investors are picking whatever stocks or businesses you want to do and let your money work for you. It's only one way, or not one way, but a good way to really build long-term wealth is really having your money work for you. If you're not earning passive income, then you're literally losing out on money at the moment. And now how you're gonna grow
Yeah.
wealth that way.
It's not fire. It's not fire. So I think that that's a good place for us to go ahead and wrap this up for today. You guys
Yes.
have been able to see our M1 portfolios for the month of May, March, April. April, that's the one. For April, we're going to keep you guys up to date on this, on what we are looking at for this entire month. I'm gonna do more. I'm gonna put more in, but I just wanted to start simple with where you guys could say, you know what, I only have $100. Cool, start there. Start there. Click the link below so you can get an additional $30 towards the M1 account. I started there. That's
Yep.
exactly what I did,
Yep.
and I've been putting money in ever since. And you
Just
guys will be able to see the same type of passive income that we're trying to grow here.
Yep. Like, share, and subscribe to the videos. Get notifications where I'm posting more. We do have a Discord channel up, so you guys can hop in there and like chat with us whenever you want to about finances or investing or anything like that. And just keep going with us, guys. We appreciate you all, and let's keep it going.
As always, you guys know what it is. We may be young and we may even be broke, but we are always investing. Thank you guys so much. Till next time. Peace.
Hey everybody, thank you for listening to Young Broken Investing. We just want to let you know that these are the opinions of the hosts. They're not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody, and have fun and be safe.